Hey everyone, welcome back to your Money Life Podcast, episode 324. So make sure wherever you listen, you like, five-star rate and review, and comment and share this podcast. Let's jump into the market update of the week, talking a little bit about what's going on as we've hit record highs on the market. So that's actually a pretty interesting tidbit of the market, but we'll get into what. So first and foremost, let's jump into that portion and talk a little bit about what's going on. Um, so let's jump into it. If you're seeing here, the market is actually in the pre-market trading. We're actually a little bit lower to flat. So we'll see how that actually turns out. Year to date, we're up 3%, almost 4% now. 3.75% pretty much year to date since the beginning of the year, since January 1st, which is actually pretty strong considering what happened in March, where people probably got a little jittery. The market got a little jittery with the war. And then we've rebounded and actually now hit higher highs, fresh highs on a year basis, up 36%, 5 year basis, 72.26%. So, yeah, it's just really been great for investors over the last several periods. And that's just the truth. Ladies and gentlemen, that is just the truth. Let's dive into a little bit about what's going on in current time. Again, we mentioned stock futures are declining a little bit to flat this early morning. If you're hearing this before the market opens Thursday, we have some earnings coming out with IBM, ServiceNow, and all these different tech companies. Tesla had better than expected earnings, but the stock shed 3% when Elon Musk warned capital expenses would rise substantially. The electric car vehicle maker moves into AI-powered self-driving cars and humanoid robots. So that's interesting tidbit there. But the Nasdaq yesterday finished at record levels on Wednesday after the president extended the U.S. ceasefire with Iran. The S&P 500 and Nasdaq rose 1.05 and 1.64% respectively, and the Dow Jones gained 0.69%. The president did say that the ceasefire extension was warranted due to Tehran's government being seriously fractured. So the geopolitical relations in that region obviously remain tense. So a lack of commitment from Iran reportedly resulted in Vice President JD Vance pausing his trip to join peace talks. Investors, like the sentiment for investors saying, all right, they believe that some sort of resolution will come with this geopolitical conflict and the earnings season is strong. So they're just saying, all right, let's keep buying. And I was on record saying that we potentially will see more volatility and we could, but as of now, investors have bought this dip and pushed us to new highs. So we are now at new highs on the S&P 500, Nasdaq, and I believe the Dow as well. And that's just telling us that, hey, again, long-term investors, if you don't freak out, in fact, if you do the opposite of what most people do and you buy during these dips, you're going to be okay. You buy during these dips and or just stay patient, you're going to be okay. And that's just all you need to do for the most part. But it's really, really hard for people to do emotionally because they still listen to headlines that freak them out. They listen to friends that freak them out. They listen to the wrong people that freak them out and they miss out on gains. You're not going to be able to time this exactly. If you pulled money out and say, I'll jump back in, I mean, it's just too quick. Recently, the pullbacks and corrections have been really, really quick. They're not giving you what we saw in 2022, where it was a year long. Even with that, there was volatility. You wouldn't be able to time it. You would just probably dug yourself in an incredible hole. But yeah, we've just seen an incredible rise. So that's just something to note is like it's really more about staying patient in a lot of these situations. Earnings season is alleviating fears of weaker economy due to the U.S.-Iran war and increasing investor interest in risk again. This is according to UBS, but they're saying that there's some warning signs that traders should be cautious of signaling volatility ahead, even if not another move downward. So, in a Thursday note, they were saying that oil prices were rising and that they do expect stocks to end higher amid a still supportive economic backdrop, but there's ongoing risk to the growth outlook and concerns over AI investment and disruptions suggest that the path upward may remain bumpy. So they're being cautious, but you'll see that and some investors are just really risk on. They're risk on. Let's look at some current news. Tesla's, and they're saying we just talked about their earnings, but they're saying that there's higher profit, positive cash flow. Tesla upended expectations of the quarter, reporting 1.44 billion in positive cash flow compared with the estimates of 1.43 billion cash burn. But investors, they didn't like the plan for the company to spend 25 billion this year, 5 billion increase from its previous forecast. Overall revenue climbed 16%, and its automated revenue grew 16% as global competition increased. That's particularly from Chinese rivals that are also in the EV market. So Tesla's big beat comes with a bigger bill ahead. That's the kind of the big headline. They're going to spend more on expenses because they're going to scale, build out some different areas of their business, the AI powered self-driving, humanoid robots. But that is the big story here is like investors are wondering how much are they going to spend. That's why the stock didn't kind of have a positive reaction to this reporting, which again, for all accounts, last quarter was really strong. Um, Last year, the company reported capex of just 9 billion. So this increase that they're looking at 25 billion is incredible. That's the AI scaling and the humanoid robots. So that's a big, big increase from 10 billion to 20, 25 billion. That's a lot. But they're growing, and that's part of the growth bumps and is to spend to grow. Meanwhile, American Airlines is slashing earning outlooks thanks to a $4 billion fuel hit. So the war in Iran continues to wreak havoc on airlines. If you think about it, again, transportation, we talked about this with the war, oil prices, transportation, not just your own transportation, but across sectors. You're going to see that hit. And American Airlines is one of the latest to dial back its outlook on rising fuel costs. They slashed its yearly earnings forecast on Thursday after incurring an estimated $4 billion hit from surging jet fuel prices. The airline is now expecting to drop to 1.10. The airline now expects earnings to drop to $1.10 a share at best, down from the previous estimate of $2.70 in January. But they do see so the CEO, I don't know if you guys heard about this, but the CEO of American Airlines is exploring a possible merger with United. Um, but the CEO Robin Ozum told CNBC that a possible merger with rival United would be bad for customers. So he's not exploring it, but United had brought that up that they want to explore merging. But it looks like American Airlines is not really for it. Um, that's interesting. So solid quarter from them. They had 12.5 billion passenger revenue, cargo revenue was 214 million, and 1.25 billion in other revenue. That's those other fees they charge us for getting on the flight, checking our bags, and all those good stuff. Upgrading, drinks. The biggest operating expenses for them was the salaries, wages, and benefits, and then of course coming in second was fuel and related taxes. Interesting. So they're that merger, airlines are such a hard thing to start that it's, not feasible to and not great for customers to think two of the largest airlines merging. That just would be bad. They'd be able to charge higher prices. There's not a lot of competition. It would just be them and Delta pretty much is the main premier stalwart airlines. And yeah, and people are really not there. People are balking at that. If you heard of Spirit, they've filed for bankruptcy twice in the last 18 months, I think. They're looking for a government injection of parachute capital to save them because they're not doing well. And I'm sure these fuel prices aren't going to be helpful. So there's a lot of thing going on in the airline industry. And people are seeing that the prices can stay high because travelers are still traveling. So that's one thing to note. Google takes aim at NVIDIA's dominance over AI chips. So Google on Wednesday announced two new chips set to debut this year. As you know, Google's looking to take aim at Nvidia because Nvidia is kind of holding that AI chip market hostage. They're the biggest players, and one of the chips that Google's releasing will train AI models, while the other will handle inference work. They said that they made these chips to handle both tasks at once. The strategy mirrors Amazon's efforts to create custom silicon and alternatives to traditional graphic processing units. Google said its new chip is designed with ample static random access memory. So the CEO said that the pace of technology change since last year's Cloud Next has never been faster. So this was announced at Next, which is Google's big conference where they announced a lot of stuff. Picture of the chips here. Really cool. I mean, this is really cool. I mean, there's going to be competition for NVIDIA now. Looks like Alphabet is stepping into the fray with this. So I'm excited to see what happens with that. That's really, really interesting. What else was there as far as current events? There was not crazy. Do we talk about Netflix earnings a little bit? Netflix did have their earnings. They sold. The investors sold on them because are still bullish, but Netflix fell nearly 10%, and this was on Friday. Its worst day since October 2025, as the Q1 revenue beat after the bell on Thursday was overshadowed by the announcement of CEO Reed Hastings' departure. Oh wow, I didn't even catch this one. So CEO Reed Hastings departing. Um, that's interesting. Reed Hastings is departing. Let's take a look. So departing from the board. Interesting, interesting. So taking a look at this, Reed Hastings leaving the board of Netflix, and investors must think he's one of the premier key people. He's the co-founder, and he took the company from mail order DVD company to the streaming giant it is today. And he's departing. And they released it in earnings, but they also said Reed's stepping away. The stock seemingly fell. They still believe in his ability, and he's taking it back. So that's actually interesting. So with Reed Hastings, we'll see what the company's direction goes. They still have Ted Sarandos, who's a really strong deal maker and content creator and facilitator on that side. But that's interesting to know. Let's look. Was there anything else that we wanted to catch for current news? I don't think there was too much. People asking here, does the stock market make sense? Let's look at this article. All told, the so-called Magnificent Seven cohort has lagged the Nasdaq 100 by 5% year to date, with the average forward price to earnings ratio, Microsoft, Amazon, Meta, Google hitting the lowest level of the AI boom in March. If investors are out on long-term earnings power of AI, why are they not willing to pay a higher price for these future earnings streams, especially if AI is heads, tech company wins, tails, the government doesn't let them lose. Interesting. So pretty much saying, why are the big tech companies not trading at a higher valuation? Um, if all signs point to they take over everything, or the government just helps them and make sure that they don't fail, which is a solid enough question because it is, one of the two things. Let's look into sports. The NBA playoffs are happening, and the chances of winning for the teams that are currently in the running are Oklahoma City 50%, San Antonio 17%, and Boston 15%. Interesting. If I had to guess on these, I mean, it's got to be Oklahoma City again. I've been watching the highlights. I haven't been watching the actual games, but the highlights are actually really fun when they cut up the highlights on YouTube for me. I could just catch them in my morning walk versus watching the whole 2.5 hour game. OKC looks strong. What else? Do anyone others teams look strong? I'm trying to think. Man, I think it's just OKC. Who's in the East? I would have to say Boston, but I don't even know if they look that strong, to be honest. I don't know. We'll see, though. We will see. Let's get into questions of the day. If there's anything new, we will attack it. This is a credit balance question. What is the average credit card balance among those? What is the average credit card debt among those carrying a balance? I think we've done this one before. It's 3 or 4K, if I'm not mistaken. Oh, the answer is $7,886. Total outstanding credit balance is 2008 to present has increased incredibly. Let's actually have you guys take a look. It's increased incredibly. If you look here in 08, 09, and this is the total outstanding credit card balance. So all the credit card companies, they've taken the total outstanding. So we were really up in 2024, and then we brought that down in 2025. And then, oh, excuse me, we were really up in, is that saying Q4? Not reading this correctly. Okay, 08, 09, 10, 11, 12. Got it. It's a weird chart, but we have really increased Now here of Q4 25. Interesting. So the average balance is really, so what happened here where we saw this dip and then we went way back up? So we are now sitting at Americans' total credit card balance is 1.277 trillion as the fourth quarter of 2025. And this is according to the Federal Reserve. It's not unusual for credit card debt to rise in Q4. Last time we saw credit card debt decrease in Q4 of the year was 2020, 2010, in the wake of the Great Recession. So they're pretty much saying it's not unusual in Q4. We got to spend Christmas, all these different things, but we are at highest levels that we've seen in a while, which is quite interesting if you ask me. That's so I think one of the things for that is just being disciplined with it. It's something that can sneak up on people. You got to be disciplined. More than likely, that's what's happening out there is lack of a solid plan. I would say honestly, a solid plan. Well, folks, that's the Your Money Your Life podcast, episode 324. Make sure you like, subscribe, 5-star rate and review. We will see you next week.